global economy is volatile. But luckily, we have somebody here to help us navigate the waters and see what's next. I'm joined today by Jeffrey Kleintop of Schwab. Jeff, welcome.
Thank you, it's great to be here.
So it's always great to talk to you. You have great insights on where things are headed. Tell me, what's next? What should we really be worried about right now?
Well, I think it's the opposite. Everywhere I go, I hear people, they're worried about student loan debt, or they're worried about what politics might do to the markets. The truth is, right now, all 45 of the world's largest economies, tracked by the OECD, are growing. It's the first time that's happened in a decade. So even though there are unique risk factors, the world economy, it's sort of this three-legged stool. All three legs are there. All 45 legs are on the stool. It's going to be hard to knock it over.
So things aren't getting knocked over, then why are so many people risk averse? Why are so many people cautious right now?
You know, they often worry when they fear that things are too good to last, that maybe their valuations are too high, or there's a bubble about to burst. But as I look at markets, I think valuations are a little bit above average, but not suggesting there's a crisis around the corner in terms of things being overvalued. And I don't think there's a bubble. We looked at things like Bitcoin, we looked at the internet retailers, looked at central bank balance sheets, even passive investing in ETFs. None of them constitute a classic bubble like we've seen in the past with housing or with the dot-com stocks that would take down the broad market and economy. So I think investors still have another good year of gains ahead of them.
See, we all lived through 2008, so it makes us all wary, right? I mean, we're not stashing money under our mattresses yet, but you know, what do you say to advisors to put them at ease, and what should they be communicating to their clients right now?
Well, there's a couple things. One is that very solid global economic backdrop, and remembering that economic expansions don't die of old age. They die because a central bank kills them. And we are far from that. The Fed is raising rates at the slowest pace in history. The inversion of the yield curve, when short rates get above long rates, that has signaled a recession 7 times, got 7 recessions for the last 50 years, perfect forecasting track record, isn't flashing that warning sign right now. I think that's something that even individual investors can understand as they look at the difference between interest rates. So that's important. And I think the backdrop is the fact that people are still nervous is maybe a good thing. My colleague Liz Ann Saunders would talk about sentiment being so important to the markets, and the fact that not everyone's in, they're still a little cautious, holding a little cash. It's probably a sign we're not near the top yet.
So with all this good news, where's the best news? What is a market or an area in the geopolitical environment that has you particularly excited right now?
One of the most exciting areas this year is trade. Global trade growth is the strongest it's been in about a decade, and that's in contrast to all the fears of protectionism we had at the beginning of the year. So those businesses really focused on capital goods and exporting in the tech sector, in the industrial sector, and even healthcare, they look really good to me in terms of their earnings growth over the course of the next year, and may lead the markets higher. Cyclicals, not defensives.
So you're at an event, great event here with eMoney's Advisor Summit. A lot of great buzz here amongst advisors. What's some of the buzz you're hearing? What has you particularly excited?
You know, people are looking at new opportunities. So what's exciting is, you know, they have this opportunity now at this point in the cycle, I think, to really begin to look at their asset allocations and figure out where the next places to go are. Emerging markets have come back in a way this year we haven't seen in a long time. I don't think that's over. But we could be due for a pullback. I don't know what that means, due for a pullback. We've gone up 30% this year. Wouldn't be surprised to see a little correction there. But the backdrop is great. Global economic growth, very strong as we talked about. Domestic growth in those economies is good. Commodity prices are stable. And the dollar's been headed down, which is actually a good thing for those economies. So they're looking at emerging markets more. I think that's really important for the long term, given that the mega trend for the next 10 years is the emerging market consumer.
So you sound really excited. This is the most bullish I've heard you, and that's exciting for me to hear. Jeff, thanks so much. Some great insights. I appreciate it.
Thanks for having me.
Appreciate
Great to be with you.
For Investment News, I'm Matt Ackerman. That's great.